Hi, everyone. Thanks for having us in today. Doug and I will be taking you through some slides in regards to due diligence best practices in the exempt market. I will have the privilege of going through some literature for you, and then Doug will have the enlightening speech in regards to M&P's experience in regards to due diligence and what he's seen in the past from just through our firm. So the key to the topic is we're focusing on the due diligence in regards to the know your product area, and basically the know your product. There's going to be a panel later on in the session which we'll have some speakers talk about, but know your product is basically talking to all products. Some will require more review than others. All size of firms will require to look at this, whether you're large or small. And every member is responsible for their own analysis. That's an important determination. So some recent events that I'd like to bring forward. In, I guess, December or so, we had an OSC staff notice 33738 come out, which talked to the compliance of EMD members, which they reviewed in 2012. Some of the key findings which they had in regards to due diligence was specifically EMDs had insufficient due diligence and knowledge of an investment product prior to recommending it. Many EMDs did not have a process in place or could not provide support for a process in place, which essentially points to documentation. So there's lack of documentation. And some EMDs relied solely on information provided by the issuer to satisfy their KYP obligations, which is not what we're supposed to be doing. The ASC also released something in 2012, Staff Notice 33-704, which alluded to some of the same compliance issues the OSC found, where it said some firms could not demonstrate, again, documentation, a reasonable level of due diligence. And when they speak to reasonable, it's a comparative language. So they're basically comparing, our peers to each other. With respect to issuers, so both the issuers and the securities, they're focusing in on both, not just the product, they're both also focusing on the issuers. The OSC in their document made it loud and clear, and they said, we are now performing targeted reviews of EMDs in regards to the KYP and suitability, which for the persons in the room, should be something that triggers another review of our internal practices to ensure that we do have best practices in this regard and are doing the right things. So some of the suggested practices from the OSC, and I'll go through a few of the organizations here, and you'll see that they are repetitive, but it's good to see that all the literature is essentially on side, some with some key differences. But EMDs should have an in-depth understanding of the general features of or structure of the product. Also understand the risks, the risk return profile and the liquidity risks of the product. Focus and understand on the management and the financial condition of the issuer. And also, I guess what some people don't look too in-depth at is the intended use of the investor proceeds and really focusing on where the money's going, following the money through the transaction, which includes looking at the costs and what is the total cost of the product. The OSC goes on and saying, before recommending the product to clients, we need to perform adequate due diligence, and adequate, is a term that everyone can argue, but it's something that if you look to best practices, you'd have a leg to stand on. Perform ongoing due diligence. So a lot of this points to not just doing the due diligence when you initially review and recommend the product, but also as you continue to recommend the product over time, you'd want to spend time in regards to performing some due diligence along the way, especially if there's some critical modifications to the product. Develop and use documented criteria and guidelines for assessing the investment, and also suggests having a trade review process, and it goes on to talk about an individual in charge of reviewing the trades and recommended products for clients. The ASC basically came out and said similar things, and it talks about an appropriate due diligence process with respect to issuers and the securities, and documenting it on the initial review and the ongoing review. And the process should include items like detailed analysis, formal approvals, internal training on the product, both at inception and ongoing, suitability guidelines, and again, documentation in regards to diligence. Another organization, IROC, put out a notice in 2009, which is a document that us service providers and a lot of EMDs looked at initially in regards to best practices in regards to doing their due diligence. And it basically outlines some of the similar items, talking about a standardized process for new product proposal. Determining whether it's a new product or modified product would change or could change the steps that you take in regards to due diligence that you move forward on. This was an interesting one in the IROC document. It talks about a global review of the product by everyone within the firm. So it talks about your compliance folks, your legal folks, finance, marketing, sales, and operations, all being part of a committee in reviewing the product. Now, some firms are larger than others and will have multiple people on this. Some will have a few less people looking at these documents, but it does say that you need to look at experienced professionals in the areas. So if you can't do it in-house, you need to look to outside assistance. Documenting a formal decision by the senior management or group, and then again, training and ongoing assessment. The document outlines a whole bunch of questions, which is a very good document that I've seen people have used in regards to creating a checklist in-house as a baseline assessment of the product which they will be reviewing. So, some of the questions are: what factors influence return? How liquid is the product? Does the yield justify the risks? A comparative analysis. And in my experience, we've seen that some people ask the questions and get an answer, but they don't really obtain a very good answer. So it's important to, we teach our staff to ask the question why 5 times, and you may find that you find some different answers. So really getting the right answers to the questions is the right thing to do. And the CSA, again, some of the same things. So based on these 4 notices being put out by these organizations, you can take a look at the documents and really drive home a sound process for your firm, and you'd have a leg to stand on through a compliance audit from OSC.